One of the most underutilized tax strategies, I think, in the Internal Revenue Code is the Augusta rule. Okay, the Augusta rule allows you to rent out your primary residence for less than 15 days a year, and you don't have to pay taxes on that. You don't have to include it in the gross income. So this is this is again US Code section 280A, disallowance of certain expenses in connection with business use of home, rental of vacation homes, etc. So we scroll all the way down to the bottom here, and it's the special rule for certain rental use. Right here, if a dwelling unit is used during the taxable year by the taxpayer as a residence, and such dwelling unit is actually rented for less than 15 days during the taxable year, then no deduction otherwise allowable under this chapter because of the rental use of such dwelling unit shall be allowed, and the income derived from such use for the taxable year shall not be included in the gross income of such taxpayer under section 61, meaning that any income that comes from renting your property out, your dwelling out for 15 days or 15 less than 15 days, sorry, I generally like to say 14 nights. Anything less than that, you don't have to include that in your gross income. You don't even show it, right? But the business gets a deduction. Okay. So I'm going to show you a visual of what that looks like and how we're going to apply that, because Section 162A is huge, and this is going to be a big benefit for a lot of people, especially if you can time it right and rent your residence out at certain times throughout the year. So let me get this visual up here. Okay, so a couple of things here. So the Augusta rule, again, tied to section 280A, is you are able to rent your home to your business tax free, right? That's the overlying strategy here, if you will. So to qualify for this, you need to own your home, right? You can't rent your home. You have to own your home. It's got to be your primary residence. And your business must be a separate legal entity, S Corp, C Corp, partnership. Those all work. It cannot be a sole prop renting to itself, essentially, meaning it can't be a Schedule C deduction on your tax return. Okay. That's the first thing. The second thing is the limit, right? You can rent your home to your business for 14 days or fewer per year. Okay, the rental income is 100% tax free because you don't report it. We just read it in the tax code that you don't report it. You don't include it in your gross income. Okay, so again, that's why it's tax free, because you don't include it. Now, you need to establish a fair market rent. And so this is what is structured in working with us, but you can also do this yourself, is establishing what holidays are going to increase prices, what events are going to increase prices wherever you live, right? That's what you're looking at, is, hey, what event is happening? What holidays drives people and families to this area? And those are the nights, those are the days that you're going to include in this 14-day limit. So that way, each night you rent it out is going to be the highest price possible. Okay. It has to have a legitimate business purpose. You want to hold meetings, board meetings, strategy sessions, team plannings, client events. It's not a sham, right? This isn't something we can just have happen and, hey, we get the deduction. We want to have documentation for that, and that's why we want to document everything. There's got to be an agreement in place between you and the business, right? You got to have meeting minutes. You want to have agendas, dated, the dates recorded, and then the business transfer. You need to transfer from your business bank account to your personal bank account and have that charted as to what that transfer was for. And it's a deduction on the business side. Again, you're taking it as a business rent deduction, as an ordinary expense, and you don't put that anywhere on your personal side. It goes right into your personal bank account, and that's it. You track it on your profit and loss, your financials on the business side, but you don't have to put it anywhere on the personal side. So again, don't exceed 14 days. It's don't inflate it above market rent, but the time of year changes the market rent. You want to avoid not documenting things, not having a written agreement. So make sure you have those and make sure you have a real business activity. And that is how you structure the Augusta rule and take advantage of that major deduction.